PB ratio, price to book ratio. I know people don't really read books anymore, but PB ratio is a very, very important and useful metric when doing fundamental analysis on a potential investment. So let's talk about exactly what it is and how to calculate it, because I listen to a lot of the videos and they tell it incorrectly. So the P part of P divided by B is simply the current price of the shares on the market. Very easy to find. It's the price of the shares. The B portion is the total assets, not including intangible assets. So it doesn't include things like patents or goodwill. So you take the tangible assets minus the liabilities of the business, and that is the book value divided by the total number of shares outstanding. That is the B portion. So P over B. I'm going to show you a free resource you can use to find the PB of any company, and I'll cover that a little bit later in the video. So what exactly does PB ratio tell us? Well, it tells us at what multiple the company is currently trading at relative to the net worth of the entire company. The question is it really the value? They talk about book value, because if you take a look at what it is, total assets. So they're talking about all their machinery, cash on hand. Cash is cash. That's legit. But when you talk about machinery, is it really worth what they're listing it as? Let's say a plant like GM that has a lot of specialized machinery in order to create certain parts of whatever they're producing. Can they really liquidate that? If the company went bankrupt, would they be able to sell it at the price that they're listing at? Because the way accounting works is you buy a very expensive machine, and then every year there's depreciation costs on it because it goes down value year over year because it's being used, it's getting older. But would you really be able to sell it at that price? It's similar to saying what the value of your home is with all the goods in it. However, if you had to go and liquidate your house and you had an estate sale, would people really be buying it at the value that you are saying everything costs in your home? Probably not. So always take PB ratio, the B portion, with a grain of salt. And when comparing PB, always do so in the same industry. You have to be wary of comparing it when doing tech or software type companies, because again, those companies, they have a lot of patents, they have a lot of software. This is intangible assets, and it's not counted when calculating PB. So what figures of PB are good? Well, a very low PB is good. Less than 2, generally speaking, it depends on the industry, is good. Less than 1 is great. It might mean that the company is way undervalued and people aren't appreciating how much it's actually worth, the foundations of it. However, a company that's trading at less than 1 PB can actually be a big red flag because investors see its future as being bleak. Remember that if a company goes bankrupt, you'll be covered if PB is less than 1. But that's not really what investors are worried about. Investors want to invest in companies that are going to outpace the growth. They're going to bring a lot of profits in. They're going to have great earnings. Price is always a forward-looking metric, right? You're building in future growth into the current price. If you take a look at Tesla's price, the current PE, PS, PB, it's nonsensical. It's so high. But people are willing to do that because of the rapid growth and potential that Tesla has. And they realize that stuff like PB, it's historical financial data. PE, PS, that's all trailing 12 months. It's historical financial data, and price is a forward-looking metric. Now, aside from the future being bleak, investors may not actually believe what the books are saying as far as the book value. They might be calling BS on it. So for instance, let's say a highly specialized company. We'll take N&DM for an example. They create electronics with really expensive 3D printing machines. They 3D print circuit boards. Now, some investors, they might look at these machines that are worth millions upon millions of dollars, and they might say, yeah, the machines cost that, but who's really going to buy that if the company goes and gets liquidated? Maybe these machines they believe aren't good enough. And so there's a lot of reasons that PB can be less than 1. And if PB is negative, that means that the company is insolvent, which means that the company has debt which exceeds the value of the assets. So if the company was to go bankrupt and had to liquidate, the stockholders would be in trouble because they wouldn't be getting much. And so as you can see, there's a lot of implications and there's a lot of many factors at play when looking at an investment. Just looking at the fundamental analysis, you should never use simply PB alone. It should be used in conjunction with a lot of the other metrics that are available that I've covered in past videos and that I will continue covering in future videos. Now let's take a look at this resource where you can find PB ratio on virtually any company. Okay, so in order to calculate price to book ratio, you can go to balance sheets and try to calculate it yourself, or you can use something that I still use, and this is an old school thing that people have been using for years and years and years, and that resource is finance.yahoo.com. So if you navigate to it, you'll see that you can input any ticker you want. So let's go ahead and take a look at Ford. Ford Motor Company, ticker F, and you'll see that we have a lot of information here. But if you scroll down, you can't really see PB ratio, but you can see it if you click on statistics. So input any ticker here, click on statistics, and it will output for you trailing PE, forward PE, price to sales, price to book. This is awesome, and they keep it current. You can go quarterly or you can go annually. However, in order to view the annual, you do need to pay. Everyone's trying to get theirs, everyone's trying to collect theirs, but quarterly, you're still able to see. So let's take a look here. Price to book ratio is 2.1. Now remember, we were saying anything around 2 and lower is pretty good price to book ratio, but let's compare it to a rival. So let's take a look at, let's say, Tesla, just for giggles. Even though Tesla's an entirely different business model, let's just see what their PB ratio is, and I'm going to guess it's high. Yeah, so it's 40.65. So people are willing to pay a really, really high multiple on the book value of Tesla. That is, though, because Tesla does have a lot of software in its business. Also, its forward PE is very attractive. And so people look at other metrics and decide whether this is a good stock to buy or not. And Tesla, it's a bit of a unicorn in the space. So let's look at an actual comparable rival to Ford, and that would be GM. And if we take a look at GM and we click on statistics, we will see that their PB ratio is 1.6, so it's actually lower. Now, this might suggest that GM is trading at a better value than Ford. However, remember, PB, it is a past metric. It's a historical metric. Price is forward-looking. So the reason that Ford might be right now trading at a higher PB multiple than GM is because their lineup for 2022, 2023 with their EV cars is very, very impressive. So people are betting big on Ford, its new factories that it's building out, and they see it in a few years as being a small rival to Tesla, or at least a better rival to Tesla. And so people are willing to pay more right now when it comes to PB ratio for Ford. However, if GM and Ford were doing almost identical things and the difference was in PB ratio, this might look like a much more attractive investment. So this is why you should always use PB in conjunction with other fundamental analysis metrics. I hope this video helped you out. If it did, please help me out. Subscribe, like the video, leave a comment. Let's continue on our educational journey. I'll see you guys in the next video.